So can you just tell me in terms of like portfolio allocation for yourself, like assets, real estate, equities, commodities, Bitcoin, crypto rather, and then cash? Like what percentage do you have in cash right now? Historically, what percentage do you have in cash? And what is your percentages roughly over like the last couple years and then moving forward?
It's changed a lot, right? Like in 2017, it was like moon boy stuff, right? It was like, well, geez, we're going 133x and you're going to like 1,000x on shitcoins. Like I was like zero cash. Like I was like, oh, what do I have to sell now to pay rent or like my next plane ticket? It was really like that, right? Now it's like absolutely 10% at all times, no matter what. And I need to get that up to 20. And I think the way we're going, choppy upwards, I'm going higher than 20 eventually. The goal probably is cash yield 50%.
I think you said 20 to 40% you might do, right?
Yeah, I think the end goal would be around half of it in cash yield.
And what are you doing for cash yield? What do you do?
Definitely not DeFi. A little bit, but not. I'm currently running the setup of a fund, and it's a proprietary fund. It's cash yield, and it cash yield via investing in ventures, quant traders that are market neutral trading. So effectively, we're investing in ventures, quant firms that can extract the inefficiency out of the market. Simple cash and carry trades, arbitrage across derivatives, across from options to futures to DeFi to all sorts of stuff like that. So there's a lot of traders out there, quant firms with sophisticated models that can extract the inefficiency in arbitrage and bring it into line. And that yields, if you're very like unsophisticated, you probably can get a 10 to 15%. If you're highly sophisticated, you can get 150% annualized. So this is like a VC for quant traders. We're looking for the really hot, interesting firms that have got interesting models and are hungry. They don't carry a lot of capital. They might be trading 10 million. The bigger ones tend to do up to 100 million. But we're looking at the little guys that can get really interesting performance, and you run a portfolio across it, and suddenly your basket looks very stable. It's like, wow, like a little quant firm can screw up and make a loss, but you don't make a loss, not across a portfolio of like 20 or 30 funds, quant funds that are trading. So
I have to ask you, you're increasingly moving this way because you see a lot of volatility moving forward with Bitcoin in the short term. Is that why?
No, I think that I'm moving this way because I see that Bitcoin's yields, like gains, are going from 50 to 100% annualized. And when I see like, wow, we can get like 40% annualized by pulling inefficiency out of the market, and maybe that'll drop to 25%, right? But damn, that's good because you not get 1 month of drawdown, not ever, which means this thing numerically, outside of counterparty risk, right? The exchange goes down, or
of course
you're hacked, right? Outside of that, this is lower risk than real estate. Real estate goes down; it's choppy. I mean, I've got the data,
and it's illiquid when it goes down. Yeah,
it's super liquid. That actually, like, if you look at real estate, at least in the market I looked in New Zealand, it didn't like equity went bang, Bitcoin went bang downwards. The real estate market in New Zealand went upwards slightly, like flat. Why? Because it wasn't liquid over there.
It's slow. You said if you want to learn about markets and how they work, trade altcoins. Just don't put all your big money in there. But isn't that just gambling? Like, explain why you say that. What do you mean by that?
Sure, it's gambling. It's gambling. But actually, all markets are, it's speculative, right? All markets are speculative until it's not. Like if you're a Warren Buffett, you're less of a speculator because looking at fundamentals. I think I'm less speculative because I'm looking at fundamentals. But actually, the thing is with markets, and at least in the short term, you can see that they're controlled. And that's the first thing I learned trading little shitty coins, right? I learned that, hold on a second, just looking at the price action going up and down, it doesn't seem like it's organic. And then I was trading, it was Madecoin at the time, that on Poloniex, which was 150 Bitcoin total volume that was being traded per day. And when my wallet size was 5 to 10% of that daily volume, I noticed I could shove the price around. I could strategically play kind of the football game, gaining yards in the direction I wanted. And I was like, that's really interesting. And it just turns out, if you talk to any market makers, that's the threshold. 5 to 10% of daily volume is what you need in your market to make that market. And then you can make the market fairly, like provide liquidity, or you can skew the market in a direction. And so you start to realize all markets are capable of being rigged. They're regulated because of that, but they're still rigged. Right? And so,
NFTs, the same thing. That's what's happening in the NFT market, you think?
Yeah, times 100.
Wash trading and all kinds of stuff.
Like, gosh, that's like, you know, I could bid on my own NFT and give it a valuation of $5 million. I mean, there was one point in 2016 when we're still trading shit coins, and like I was, you know, everyone's got their Telegram trading friends, like, hey, what are we doing? We're buying what was it? It was like Bitcoin or some weird shit. It's like, this looks like technically it's a good setup. It's like, all right, I'll buy it. Everyone's like, suddenly there's 5 of us buying it, and it's a tiny little shitcoin market, like tiny. And I was like, all right, I'm gonna put a buy wall here, provide confidence, and suddenly we were like rallying the price. We realized we were rallying the price up. And then we was like, wait, there's another group rallying the price up. And you think they're in Europe because of the time zone. And then it was like, suddenly we got it to a point where this thing got momentum and it started going exponential, and we just dumped, right? So basically we did a pump and dump, but perfectly fair, right? We never had a pump and dump group. We just played market dynamics. We were making a market and pushing the price up because we wanted to go upwards, and we had enough firepower between the 5 of us in this tiny little shitcoin market. So like, I think trade shitcoins because you can learn all this stuff and suddenly you understand markets. And actually now, you know, if I look at Forex, I go, oh, that's bottoming, or it's in a bad trend, I'll wait a bit. And, you know, like any market, all of life is market. You're buying a house, what time of the market is it? You know, so timing the market,
timing
and
is
reading
everything.
it is super important, right? It can make and break your livelihood. Like businesses that like invest in more capital infrastructure right when the market's about to top, that's important. You could learn that lesson trading pink coin, you know, or whatever, like baby doggy coin. You can learn that stuff, so why not? Like,
Shiba,
it's a lesson.
Shiba Uno, whatever it was,
right? It's like learn. So basically trading is about learning as much as you can for the amount of money you're losing, because you're going to lose. Like 99% of people lose over the long run on trading. I think that you want to like just like get some exposure, get on with your life, like whatever. Like I bought 3% of my investable assets in Bitcoin, you know, and that's it, and that was fine, no sweat. And I think it's fine.
Let me ask you this: you bought 3% in Bitcoin when you did, right?
Yeah.
Did you increase your allocation over time, just let it grow and just not rebalance it?
No, that was my cap. Like I started with 1 Bitcoin, and I was like at, what was it, $600. And I just went up to, and I said no more than 3%.
But do you rebalance it to keep it at 3%, or just let it ride?
No, I just let it run, and then it was like, gosh, it went to 90%. 2017, it was like over 90%, and I was like, whoa, that's nuts, right? But yeah, I just say do that and forget, get on with your life. If you want to learn about trading and markets, you want the education, you've got school there.